Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today Monday, 27th of June, and we will continue to talk about the euro currency. Well, the coming week for the euro will be very tough, and some additional commentaries you can read on our forum on the weekly thread, where we have posted the fundamental part of the research that contains some analysis of the coming events during coming week. But this is the daily time frame, this is daily analysis, so we will talk about the technical issue of the potential move on the euro currency. Well, in general, we have to say that current environment in the euro currency is bearish. This comes from the recent price action on the market. We have the weekly bearish trend daily, and for our trends are also bearish. So what do we have here? As you remember, this was the pullback from the solid support area. Market just hit the 618 resistance from the swing down and continue to the downside. This is the normal price action during the bearish environment. Also, you can see that despite this potential retracement, the trend has held bearish. That's in general confirms our expectation on the continuation down move. Well, just above the market you can see the three different targets. First target from this recent ABCD pattern, it's 137.94, it's right here. Second target is a larger ABCD, ABCD, 137.02, and currently you can see that this could be the potential butterfly buy pattern. The target of this pattern, nearest target 127 extension from this high to from this low to that high, stands around 137.29. I just want to remind you that this is the monthly confidence support, and if you are a positional trader and hold the positions for a long-term perspective, that is your area to watch for. Here, if you use some buy signals in that area, this could lead us to, if market will realize this continuation move to the upside, this could lead us to 152 area. The target of this swing down from this high to this low, 127 extension, is 152. Well, with the more details you can read in the weekly thread. Here you can find the explanation of this target 152, where it comes from. Also, market could reach as far as 160, but this is very long-term perspective, and if you are interested with it, just visit our forum and read the weekly thread. Well, in the short-term perspective, in the coming week, that general environment on the daily time frame tells us that we should search for the possibility to enter on the short side of the market, and this could be the two areas that is suitable for that purpose. Let's shift to the 4-hour chart. What do we see here? The red line is the MACD predictor, Jodnapple indicator, that shows trend. When the market below it, the trend is bearish. So that, as you can see on the 4-hour chart, now trend is bearish. Also take a look at that pattern. This is the stop grabber, bearish stop grabber on the 4-hour chart. What stop grabber in general? This is the failed shift in trend. You can see that market has opened above the red line and tells that the trend has shifted bullish, but at the closed, at the confirmed signal, market hasn't confirmed that. So market has remained the trend bearish, and those people who entered on the shifting trend on unconfirmed signal entered long and now trapped in the wrong position, and usually the signal leads to taking out of the previous extremes, since the stops of those who have taken the signal placed somewhere below that area. That's why it's called stop grabber. Okay, and this pattern relatively indirectly confirms our expectation of further move to the downside. As you can see, the nearest target is right here, 140.28. This is the 618 target from that pattern A, B, C top. Also take a look that this lime dash line is the weekly pivot support one, stands 140.18. So that an area to watch for on Monday. The major question still remains: how market will go to that area? Will it show the retracement to the weekly pivot point first and then accelerates to the downside, or it will reach that area and then and only after that probably will try to show some retracement due to inspection on that area? Also take a look that this is the previous lows and that target stands below it, so you can see some penetration of that area due to stops that has been placed in that area. So keep an eye on this area. This is our target for the Monday. Now, due to this problem, well, how market will reach it? First reach it, then show retracement, or first show retracement, then continue to the downside. I could suggest you and offer you two different ways how to enter in this potential position. As you can see, this is hourly chart. The blue line is the weekly pivot point 142.13. Just above the market stands the hourly confluence resistance 141.72, 141.75. That's the first area to watch for, the potential area to enter on the short side of the market. The second area is the weekly pivot point and 618 resistance from this recent swing down, 142.10. You can see that these two areas very close to each other. Well, although the entering from the second area is much safer, and because this area is higher, this will give you the better entry point. Also, you could place the tighter stop, but the problem with that area is that market could not reach it. Market could show some retracement to that area and accelerates to the downside, because all trends are bearish and market is not at the oversold area, as on the 4-hour chart, as on the daily time frame. So theoretically we have no barriers to continuation to the downside of the market. In such kind of environment, usually market shows very shallow retracements. It could not just reach that area, and you could just skip this potential move to the 140.20 area. Okay, so I think that this preferable scenario is to search for entering from that area. Drop your time frame to the 5-minute charts, and probably you will see some reverse patterns in that area, some sell signals, and take it. The stop should be placed at least above that area, somewhere around 142.25 in terms of the futures quotes. In terms of the spot quotes, it should be somewhere around 142.55, 142.60 area. Okay. Well, the preferable stop is above that area, somewhere above 142.50, because you can see this is some resistance, and this just gives some room to breathe for the market. Market will show some flirting with that area. You will not be just stopped out by the occasion. Okay, so it's better to place stop just above it. Well, or as I said, to enter from that point, but probably market could show retracement to that area. Still, this area is very close. That's why I think that this is the more preferable area to enter. Tighter area, majorly due to overall environment that market has no barriers currently to continuation to the downside. It has some bearish pattern as a 4-hour stop grabber. So I think that would suggest that probably market will show shallow retracement and acceleration to the downside. Then market will reach that area. But keep in mind keep an eye how market will show this retracement to that area. If it will be just thrust bar to the upside, of course we should wait a bit more and look how market will behave in that area. If it will be some gradual and choppy move to that area, probably this area is preferable to enter the short side of the market. So that being said, in current environment is very tight, and your on coming week we should expect a lot of important macro data and news due to Greece and some PMI and CPI data from the Europe that could be make the significant impact on the behavior of euro currency. But technical environment tells that market has a strong bearish bias, and I think that keep an eye on that area, and that area to enter on the short side of the market. If you're a positional trader, keep an eye on 137 area, because it can be a very significant area to establishing of the long positions on the market for the long-term perspective.